Fed kept the rates steady, and we have the Hang Seng, which is doing really well right now, 0.7% higher there.
Now, few details about the brand. Godrej brand will be used by both the factions, is the understanding.
Now, the low of 22,385 is the first marker, which should not break. If there is any more correction, 22,400 is the line in the sand. The 20-day comes in around there at about 22,443.
And I'll watch out for all the OMCs because all of them sold out in Tuesday's trading session. But Brent crude prices are lower, so maybe they're in for a bit of a bounce back.
The open is down 22,597, 22,600.
The growth has been tepid in FY24 overall.
Markets are cruising along. The Nifty and the sensex up close to about 0.3%.
हर जगह इंफ्रास्ट्रक्चर के डेवलपमेंट के काम हो रहे हैं.
And the third big trend I've noticed is there's finally a comeback in the commercial vehicle sector.
And so my prediction is that Airbnb will boom in India. It's, an emerging market for us.
Well, for the markets, it's a decent looking day today, barring Nifty Bank.
Well, that is the day so far, and it is turning out to be another good session for the markets. One just hopes that today is not like Tuesday, because we kind of started with similar words on Tuesday, and then the last 60 minutes absolutely changed the face of the market by close. I don't think, this is going to be that one. This is, of course, Closing Bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. Rima Surabhi here with me in the studios, and Nigel is joining in from the newsroom floor. Guys, hi. Afternoon.
Hi, good afternoon. I guess the difference, Prashant, is Tuesday we were starting the show with a massive rally. Today on the indices, at least that rally is missing. More about, I guess, individual stock action.
There was also
today.
a holiday in front of us.
We started on Tuesday. I think the positive overnight was that, crude oil prices were down, and we have select parts of the market that are reacting very positively. Just take a look at the OMCs. They're blazing away. HPCL is now up close to around 8%. And remember, all these stocks were the biggest losers when we went into that midweek break on Tuesday afternoon. So crude oil prices correcting, well, it's always good for the economic perspective as well as some of these select stocks.
Absolutely, and a really large fall, and perhaps more to come, as some experts were telling Manisha earlier. I'm talking about oil prices on the way down. We'll see. But just a quick few points before we kind of sort of take the conversation forward. It's a decent session, and I don't know why, but the morning the market open was kind of flat, and that gave a really good opportunity for those who were looking to trade the very short term. Otherwise, you start with a gap up, and then you start to wonder what next. But today, I think it was nothing. It was a flattish start, and then, of course, the market pulled back up. Short-term support, we're looking at the daily averages, and that's basically the 20-day for both the Nifty and the Bank Nifty, but that is a little further out. So I looked at the closer by support levels. The 40-hourly average is 22,565. We are at 22,653, so about 90-odd points away from where we are on the Nifty. Bank Nifty action is lackluster. And by the way, it's taken support at the 20-hourly and bounced back. But the bigger near-term support is the 40-hourly, which is 48,872. It's not very far away, about 1.5%. And in terms, if you want to look at specific sectors, etc., it's PSUs, OMCs, of course, are a part of it. But it's not just oil marketing companies, so much more. Metals, again, there is a large overlap between the listed metal stocks and, of course, PSU metals as well, and autos, which are also, for the second day running, doing very, very well. So, we'll shed light on all three as we go along. Rima.
Well, in autos, it's Bajaj Auto, which is powering through. That's up close to about 2.5%. But giving it company a little lower is Tata Motors and M&M. But as you can see, the Nifty Auto Index itself is rising in trade. Another beneficiary of the decline in crude prices is Asian Paints. And Asian Paints is charging ahead with a 3% gain. So painting the screen green over there. On the losing side, it's banks. So the Nifty Bank per se is down 170 points. But it's not just Kotak Mahindra Bank, which is down 3%. Even an Axis Bank, an ICICI Bank, IndusInd Bank, these three private sector financials have a cut of close to about 1%. But there's so much happening outside. The mid-cap index itself is up close to about 0.5%. And there you have a Jana SFB, one of the recent listings up, a double-digit gain there. MOIL, IndiaMart, a long list of individual stock-specific movers.
No, absolutely. It is really about individual stocks today. And the move on Jana is absolutely breathtaking. 20% on Tuesday. And on top of that, you've got another 15%. So that's really saying something. Clearly, the buyers are live and kicking in the market. Chola Investments, by the way, and we spoke with the management in the morning, Chola Investments is now pushing a 9% gain. It was really hard to find any fault with the numbers on growth, on asset quality, on cost of funds, on margins, and they're sounding as optimistic. So that's another stock that's flying high. Then you have, by the way, even Chola Finance is tagging along 6% higher on that one as well. Dabur is now reacting well to numbers, about 3.5% up on Dabur. It's gained in the last 15, 20 odd minutes or so. IndiaMart, after our interview, after they said that new subscriber additions are going to move up from an average of about 2,000, 2,500 every quarter to 5,000 as early as Q2, the market really took note of that statement, 8% up. So it's really been a lot about individual movers and shakers. But the Bank Nifty has disappointed, and that's something that you can't take away from. Kotak obviously is the big culprit, but even others, ICICI Bank, etc., they're a little lackluster today. So, Nigel, after the whole drama on the Bank Nifty on Tuesday, today is not very inspiring from the bulls' perspective.
Well, that's right, but at least we're holding in the green, Surbhi, and the good point today is at least the broader markets, there are select stocks that are doing very, very well, and some of those stocks the street is really latching onto. Just to give you an example, you have Ambuja Cement. So the numbers were disappointing, either which way you slice it, but the street is willing to look ahead, so that's why that stock has recovered more than 3% from the low point of the day, because it has cash in its books, it's talking about doubling its capacity nearly, so that explains why that one as well is currently recovered all of its losses. How do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Hi Mitesh, good afternoon and good to see you win. What's your view? We're holding with gains of around 60 points odd, but it appears at around the 22,700, 22,750 odd level, there is a bit of a resistance out there.
So, good afternoon. I think, the index with that big fall which happened on the last hour of Friday, will kind of retrace that candle nearly 50% with the bounce back today. But then for the next few hours, we went sideways. So there was no follow through happening to that retracement, which means that we might not be giving a signal of breaking into fresh highs again immediately. I think we just start taking a pause. The markets should be sideways in the coming couple of days. And the stock side, I have views on Bajaj Auto. I think that was being discussed any which ways. Very good pattern. It's completed a pullback, now getting into an up move again. Buy here with the stop below 90.50 for targets of 92.70. And the other stock is Bosch, which is also showing a very similar kind of pattern to Bajaj Auto. That's a buy with a stop at 30,200 for targets of 31,350.
Okay, thank you very much for that. Let's move on to Cholamandalam Investments, surging in trade, reacting to its robust Q4 performance. Abhishek joins in with the earnings fine print and even what the management had to tell us. Abhishek.
Well, Chola, robust quarter. If you take a look, the credit cost is at 8-quarter low, net interest margin is at 4-quarter high, and asset quality gross NPA ratio is at 13-quarter low. So if you take a look at the gross NPA ratio, it's down to 0.5% versus 1% quarter-on-quarter and 0.9% YOY. The net interest margin has come in at 7.8%, which is a growth of about 40 basis points on a sequential basis. The cost to income ratio, that's the flip side, that's at 8-year high, or even more, coming in at 44.7% versus 42% in the previous quarter, but strong disbursements. Disbursements have grown by 18% YOY and more than 10% sequentially. The AM growth has beaten analyst estimate. It's grown by 36.7% YOY and about 8.8% sequentially. And if you take a look, Kotak Securities was estimating an AM growth of 35% YOY and about 7% sequentially. The asset quality gross NPA ratio is at 13-quarter low. It has come in at 3.54% versus 3.92% in the previous quarter. We did speak to management. They did say that the net interest margin will be maintained at current levels of 7.8%, and they see AM growth of 20 to 25% in the next fiscal. Back to you.
Okay, all right, got that. Abhishek, thank you very much indeed. Cholamandalam. Stellar performance coming in over there and very strong commentary as well. Let's bring in Devan Choksi into the conversation then. He's joining us this afternoon from DR Choksi FinServe. Devan, great to have you on as always. Welcome to the show. So let's start with some of these positive result reactions. Cholamandalam, just another scintillating quarter. What about the stock and current valuations? Would you still like it?
Yes, Ruby, good afternoon. Well, on one side, the vehicle finance business is, I think, doing well, largely because of the fact that they're predominant in the commercial vehicle segment, particularly, where I think the demand scenario is upbeat. And I think if you see the auto number even for April, I think this suggesting that I think a big jump which has been seen in case of companies like Tata Motors and even for that matter companies like Ashok Leyland. So certainly I think commercial vehicle and I think the financing activity related to that is showing a distinct sign of growth and improvement at the same time. On the other side, the other vertical for Chola, the housing finance vertical, though relatively a small component in the entire balance sheet, I still feel that I think this is the one area where probably likes of Bajaj Finance with Bajaj Housing Finance kind of a subsidiary and companies like Chola will probably have relatively much larger growth to talk about, given the kind of shape that we are seeing in the housing activities, including I think the affordable housing activities. So overall, I think the environment remains pretty conducive for the financing companies, the NBFC companies, and I think the vehicle finance, retail finance, housing finance are the three mainstreams where probably we are likely to see the larger growth continuing for them.
CLSA and Nomura, though, have a reduced rating on Cholamandalam investment. Nomura's target price is down 1,000 rupees, so much lower than the current market price. And they say rich valuation leaves no margin of safety. Deven, afternoon. Wanted to get your thoughts in on IndiaMart. Now, IndiaMart has been an underperformer. In the last 1 year, the stock has only given a return of 1% due to the tepid quarterly paid subscribers that they were adding. But do you think now the cycle is turning? Because quarter on quarter, we've seen an improvement in the quarterly additions to their subscriber, and the management appears to be more upbeat. They're saying it should get back to the normal run rate by Q2 of FY25. Considering its recent underperformance, would you bet on IndiaMart at current levels?
So fortunately, I think the underperformance on the operations side, I think it seems to be getting arrested. That's a good thing. But the silver segment of customers probably, I think, needs to come back and I think contribute significantly to the entire revenue model for the company. In my viewpoint, I think the real test for this company would come once the ONDC gets implemented with the logistic connected to it. I think today the challenge is being that I think the logistic is not connected to online network of digital commerce. And that's where the sailors are still continuing with the aggregator models of IndiaMart kind of companies. Moment I think you see the ONDC platform significantly ramping up, I think, and connecting the payments as well as the logistics. In my understanding, I think the transaction execution would be far more superior over there. And some of the sailors, I think, who are right now working on the call-based inquiries would probably see their execution happening onto the online platform likes of Flipkart and Amazon. So to a greater extent, I think this could be a really interesting thing to watch out for. The company is adequately priced according to me. I think 51, 52 times trailing 12 months price earning ratio is practically not leaving much room for investors to make money out of it. So unless you see a very dramatic rise in the profits, I think we are not likely to see a major surge in the stock price in this particular counter, even though these operations are getting stabilized.
Okay. Devin, stay with us. We have the management of Dabur now joining us to take us through some numbers, and they just reported earnings. Mohit Malhotra is CEO at Dabur India. Mohit, good afternoon. Great to have you with us here. Prashant this side. Revenues are in line. We're looking at the operating profit, which is in line. Margins, I mean, almost exactly in what the market was expecting. Volume growth maybe even a little better. Volume growth expectations were between 3 and 4%. You've done 4.2%. So if I can begin by asking you to sort of characterize the kind of growth that you've seen and also guide the market a little bit about what FY25 really holds across segments, healthcare, home and personal care, oral care, and others.
Yeah, hi, Prashant. Thank you for having me. So I think overall results has been above our expectations. So I think the big thing is that volume growth is around 4.2, like you rightly mentioned, and volume growth is being underscored by our rural performance, which has been very high. So our business has grown actually 8% in rural and 4% in urban. So there's a 400 basis points of difference between rural now chugging better than what it used to be. Actually, after a span of 3 years that we've seen rural ahead of urban. And syndicated data also mentions that, and it's also very evident in our tertiary and our secondary numbers also. Partially it's got to do with the rural prosperity kind of inching up and infrastructure investments of the government yielding results in the rural, and also base effect kind of going away. And going forward, I think rural will drive the growth because urban is navigating a little bit of high basis of last year, and e-commerce and modern trade are also kind of going through a lap over now. So I feel there are green shoots now in rural. For the first quarter, as I told you, in almost like 30 quarters, 13 months is what we have seen, rural kind of coming back. So I'm pretty hopeful on that. As far as categories are concerned, our oral care business is doing exceedingly well. We're gaining market shares of around 20 bips in oral care, and the business has grown by around 24%, driven by our Dabur Red brand. Then our hair oil business has also gained market shares. Our Chyawanprash, honey have also done very well. Our beverage business was a little bit muted on account of unseasonal rainfall which happened in the summer season. So I think we are pretty well prepared going forward in the future, and we will be delivering because now the price increases are over because of the deflationary environment. So most of the growth will have to come in from volume growth. So we expect high single-digit volume growth coupled with maybe 2-3% of price increase. That's about it. And we are targeting low double-digit kind of growth going forward next year.
All right. Hi, Mohit. Very encouraging to hear that rural has suddenly come back into picture. I've been speaking to you for the last few quarters, and every time you say that, rural is a little bit sluggish. But this time around, as you're saying, well, things are looking up. A couple of questions then. If I got that correct, you said that the volume growth will be in high single digits, right? With price increase of 3-4% for FY25.
Yeah, so we will have volume growth of mid to high, and with 2-3% of price increases, Nigel. Okay. That will vary in different categories. So in healthcare, we expect a 3-4% price increase. Beverages around 1%, and HPC thereabouts around 2-3%.
Okay, all right. What does it mean in terms of margins, Mohit? Because as you've said, you'll spend a little bit more on advertising and promotion as well, so that proportion could move up. But your goal is to take margins to around 20%. So in the near term, how would it look? FY25, what kind of a margin number you're looking at?
Yeah, so in medium term to long term, we expect the margins to actually improve, Nigel. If you look at my guidance for last year, we guided for around 19.5% kind of margin, and we are around 19.4%. So we have delivered as per our guidance for last year also. Going forward, we are undertaking a lot of Smriddhi initiatives, the cost-saving initiatives across the value chain in the company. As we speak, we're working with actually a consultant for a lot of cost optimization efforts and activities. And by virtue of that, I think we should be improving our operating margins going forward. Like if you look at the advertising cost, full year, last year, we've grown advertising by around 30%. Now, next year, this advertising growth will not be 30% growth. On a 5% top line, we've grown 30% advertising. Next year, going forward, it will be in the double digits or a high double digits because you have to inch up the percentage advertising to the total revenue to keep demand, resilient. So I think that will all help us in improving our operating margin. I can't give you exact guidance how much it will be, but I think we should be around about 20-odd%, yeah.
Okay, so margins of around 20-odd%. And Mr. Malhotra, hi, good afternoon. Your ad spends, which have started inching up, do you intend to go to that level of 8 to 10%, which you have spoken of in the past?
Yeah, so it's already around more than 7%. So we want to take it up to around 8%. And if advertising spends grow ahead of the revenue growth, it will. And that's what our endeavor will be, to take up advertising spend to that level.
Just a word you mentioned, the toothpaste. So I just want to mention here as a happy customer. I thought, maybe I'm in the minority, but clearly not, because that's a category that's doing very well for you. Do you see that as a sustained pace of growth? Because it's been your best performing category. And what are the factors driving it? I mean, is there some price increase or is it all volume growth? And what's the expectation there?
Yeah, so if you look at oral care business is growing. The category is also growing at around 6-7%, although our growth is around 23-24%. And this growth is driven by the herbal category growing ahead of the non-herbal category. Herbal category is 200 basis points ahead of the non-herbal category. It's already become around from 30% to 31%. It's growing, and Dabur is driving the herbal category with Dabur Red at one end, Babool at the economy end, Miswak at the premium end, and Dabur Herbal Toothpaste is a new launch that you guys have done. So we have all the price points in the herbal category, which is what we are driving it as a leader. So I think that differentiated proposition in the whole market is helping us getting more consumers, and there is a wave for back to nature which is actually happening, and it's just not in India. I think it's globally that is the wave, and we see our herbal toothpaste franchise even international doing very well. So we'll be steadfast on this approach and owning the herbal category as a leader and driving it. I think that's the single differentiating factor.
Mohit, a quick word on the international business and the outlook for it in FY25.
Yeah, so international business has been mixed picture for us. While in constant currency terms, we have grown brilliantly. Well, for the full year, it's a 16% constant currency growth that we've got. For the quarter also, we've had a 12% constant currency growth. But there are some markets like Egypt and Turkey where steep currency devaluations have actually dented our translated growth in INR. So as we lap over the currency depreciations, I think things will become better in terms of translated. But in constant currency, we should definitely deliver a double-digit growth, mid-double-digit or maybe a high double-digit growth in all respective international markets. Like Turkey business has grown by around 40% for us. Egypt business around 60% in local currency. Our SAARC business has grown by around 8%, and about Sub-Sahara around 20% growth. So I think internationally, overall, we are okay. But for one business, which is say in the US, which has not performed up to our expectations, this is because of the relaxer category not doing very well in the US business. But Sub-Sahara of Namaste business is actually doing well for us, which is growing double digits. And we expect the same growth to continue next year.
Got it, Mr. Malhotra. Thank you very much for joining in and providing us with some inputs and some color on the Q4 performance and the trends as you see them shape up in FY25. Really appreciate it. That is Dabur India. Devin, of course, has been patiently listening into the conversation. Devin, I don't know how much you could hear, but, I'm asking you a slightly broader question. So you've got Dabur on one end. I'm just talking about how to play consumer from here on. There's a Dabur, there's a Trent where the performance was very good. Havells did fairly well as well. So we've got a whole slate of earnings coming in on the consumer side, from staples going up to discretionary. What has stood out for you so far this quarter?
Well, I think most importantly, the business conditions, I think, remains extremely conducive for the discretionary spending. And as a result of which, likes of Havells, Voltas kind of companies, they certainly have relatively stronger quarter also continuing in this April to June period. So they really remains, I think, the favorite of the lot compared to the peer FMCG guys who are typically driving their growth in a single digit, and at the same time, I think on a tighter margins to a greater extent. So obviously, I think the white goods players are relatively better off. Even for that matter, the retail business of Trent, as you mentioned, or for that matter, Reliance Retail, I think they remain relatively more stronger compared to the FMCG part. Maybe I think all the companies put together today, if you see the valuations, none of them are available cheap. And that's where I think the market or the investors having a fatigue, because I think if the valuations are not available for the upside, then possibly one will have to wait for a good period of time till the time I think valuations are available at a reasonably good opportunity level. In my viewpoint, I think that is where one will have to wait for this market to give some kind of a decent correction. If at all it comes, I think that would be a good opportunity to buy into some of the consumer staples as we see it.
All right, Devin, we'll leave it there. Good conversation as always. Thank you very much for your time. Appreciate it. We'll take a break. We are back. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities PMS. He'll be with us on the other side. Stay with us.
Welcome back. Auto sales are a mixed bag in April. Sonia is joining in with what's performing and what's not. Sonia.
Well, thanks a lot for that. So, for auto sales, right, I'm going to talk about three big trends that I noticed in this month. And one of them is that two-wheeler sales have been very strong. So if you look at it, Bajaj, Hero, TVS, Eicher have all reported very strong sales. The best of the lot has been Hero MotoCorp because it's come off a low base and also the rural market is staging a bit of a recovery. Royal Enfield sales have gone up 12%. TVS Motors been very strong at 25%. The other big trend I noticed is that tractor sales have continued to be under pressure. M&M tractor sales still saw a growth of about 2%, but Escorts actually saw a degrowth this time of around 0.7%. Demand is impacted because of several reasons. One of them is the ongoing elections, the low water reservoir levels, the decreased haulage activities, a moderate Rabi output. So all of this has hit the tractor industry. The other big trend is that commercial vehicles companies are staging a recovery. Today, if you see Ashok Leyland stock is up 3%. That's because the total sales have gone up 10%. Even, Tata Motors CV sales are up 31%. Eicher Motors is the only one that's been lagging. It's down 18%. But stripped of that, the other companies have done quite well. Back to you.
Okay, all right. Sonia, thanks very much for that. Interglobe Aviation is the other one, right? Which, of course, is doing well. And we've been highlighting this, broker after broker, coming out and kind of talking about the opportunity for Interglobe. Today, we came in the morning, there was that tailwind of oil prices, which were down 5%. But Sonia, but that's just sort of the near term. The total addressable market is what the market seems to be excited about.
Absolutely. And, as you said, right, lots of brokerages coming in with positive notes there. The stock, by the way, is at a fresh record high today. It's already gained about 37% in 2024. I have two notes. So one of them is from HSBC, where they have raised their target price to 4,445, which is a big upside to the current market price. They talk about Indigo's strategic decision to place an order for 30 A350 to 900s with an option for additional 70 aircrafts, and they say that order looks quite sensible at the moment. Most of the drivers are favorable. The product quality and execution will be key though. Despite strong competition, they think that this strategy is well supported. Kotak has increased their target price to 4,700 on the stock. They talk about how the order that Indigo has placed is impactful, yet it is a prudent move. The role of wide-body aircrafts is to expand the range and size offering of the aircrafts. Back to you.
All right. Thanks very much, Sonia, for that. So that's, two sectors which are doing very, very well. Autos, as a overall sector, has done well. Aviation, Interglobe, of course, is the leader. Not very many choices there. And I think that is the other one, the other reason why, there is a fair bit of crowding in which happens for Interglobe. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. You heard Sonia talk about Interglobe. So I just wanted your thoughts. Do you own it in your fund? What are your thoughts here?
Yeah, so it has been part of our portfolio for quite some time now. In fact, one of our top 10 holdings. Because we have seen, from 2,400 levels. I think that was the level when we saw one of the promoter was exiting actually the stock. And before that, we had seen a lot of conversations happening between the promoters. So when that particular cloud started getting clear, I think that is where the stock started taking the different trajectory. So we accumulated around 2,400 and still holding the stock. And I think looking at the traffic, the passenger traffic, which is continuously increasing. You have summer vacations also now, just forget about airlines. You can see the hotels also booked like anything. And that is where the number of people, and recently we saw Vistara also, they, stopped around 10% of the move because of the pilot's problem. So that also benefited Indigo in a way. And I think the kind of orders they have given for number of aircraft, this is also a record actually for those manufacturers ever in their life. And this is where I think the domestic story, the domestic tourism, you don't have many players in the listed market to play. If you look at hotels or you have airlines, you may have safaris or VIPs. So that is where in the liquid space, you have to play these stocks. And I think that is where this stock is garnering more strength now when at least the promoter side problem is off. And the last time when the promoter had exited around 3,000, you saw that stock did not decline below those levels at all and just, was building up. It's a good sign of strength.
Okay, all right. Hi, Amit. Good afternoon. Good to see you win. What about the metal stocks? How are you placed out there? your stocks like Moil that have moved up, some of these backward integrated companies as well are doing well, like Infra. But, you had a brokerage note that came in today from Equirus. They are saying that SAIL has ran away ahead of itself. You had preference for miners. What is your fresh take on it?
So metals, actually what we like this time is, it is not a scenario where metal prices are going higher, earnings are catching up because of that, and then you get stuck up at the higher stock prices. Because when the metal prices are getting topped out, you don't know. This time the situation is not like this, thanks to China. Because of that slowdown, still the prices are lower, but there is more volume expansion. In fact, the domestic steel companies are much better placed than the foreign companies. In fact, you would have heard about Biden. Actually, he was looking to put around 25% tax actually on the Chinese metal companies. If Trump comes, we never know, it can go further higher. So in that scenario, I think Indian companies, the metal along with mining, I think both are looking better because this volume expansion is happening. And you look at the efficiency also. For example, Jindal Steel and Power. So we have seen that the EBITDA per ton has reached almost 15,000 crores. It is one of the best actually in this particular space. Also, this company had 4.4 times debt to EBITDA before, and now it is reduced to 0.9 times. I think one of the best thing is your value-added segment where you garner more margins. It has increased to almost 65% sales of this particular company. And that is where I think going forward, the numbers can be better. And the stock is, I think gearing up for that. So you will find good companies in the metal space here where I think that growth opportunity is coming. And from the mining, I think NMDC, we have picked up, it had declined recently towards 200. And we feel the volume actually, which used to be 30 to 35 million ton before, in the last 1 or 2 years, it started coming closer to above 40 million ton. This year, actually financial year, it has closed around 45, 46. And in the coming 2 years, it is coming closer to 55 million ton. So we feel that this trajectory is going higher because there is more demand for steel. And from 175 million ton, that demand is going to 300 million ton going forward. So this is where the iron ore requirement from the current 382 million ton, I think it is going to have 450 million ton going forward. So much higher increase of volume, and that is where these segments are getting benefited right now.
Amit, is Kotak Mahindra Bank a part of your portfolio? Was it one of the preferred picks? Because there has been a fair amount of derating and bad news surrounding it. How would you approach Kotak Mahindra Bank?
No, because of valuations, actually, we were never into the stock even before. We, in fact, like some of the PSU banks, which were part of our portfolio. And I think in the month of June, when possibly you will start seeing the money flow coming from the JP Morgan bond index into the Indian government bonds, our bond yields, which are already subdued, 7.2% vis-a-vis US bond yield, which already moved to 4.6%. I think you will see some cool off in the bond yields, and I think it is also possible some interest rate cut towards the last quarter of the calendar year can also be seen. In that case, I think some PSU banks can definitely do better, which have a higher chunk of government bonds with them. Treasury profits can come better. And I am seeing that the corporate lending book also has started growing, so which can also benefit. So eventually, I think this is a good space where you can be in. And yes, it has not participated that much in the last few months, but it is possible that it can pick up eventually as we move towards June or beyond.
I mean, do you have a view on, actually, let me do one thing. This is Federal Bank I wanted to ask you about, but we actually spoke with Mr. Shyam Srinivasan. We reported earlier that Mr. KVS Mani and the joint MD of Kotak Bank, who actually stepped down, that he perhaps is going to be one of the names, who's one of the candidates for the top job at Federal Bank. So after the results today, we had the opportunity to put some of those questions to Mr. Srinivasan, whether he is actually one of the candidates. Take a quick listen, and then Amit, why don't you respond?
Earlier interactions, we've mentioned that the board has set up a search panel that's going through its process. I'm sure, be sure when the regulatory approvals come in, it will be first flashing on your screen. So beyond that, it's hard for me to even make any comment because the process is in an advanced stage, but underway. So beyond that, really no comments. It'd be inappropriate to make any statements. The regulatory process is underway. The search panel is doing its job and doing it very well. All I know is they have a rich slate of candidates. We did say that we have both internal and external candidates to choose from, and the process is underway. Honestly, beyond that, everything that is being talked about is absolutely in the speculation zone.
Okay, so both internal and external candidates are in the reckoning, and the panel is going about looking at the list of candidates and shortlisting them. Amit, so lots of drama, right? And this has caught everybody's attention. But what do you make of things? Because, Kotak in itself has run into a lot of rough weather. It's been a bad year for the stock. I mean, it's already down 17-18%, worst performer on the Nifty. Now, for a lot of people who are holding this stock, saying it's a blue chip bank, not much to worry in the portfolio, what would you say?
So I think very simply, we need to look at the core fundamentals and the current valuation which the market is giving you. So when you talked about Federal Bank, I think mid-cap private banking definitely has some juice left. And Federal, and actually what's happening, the kind of provisions they had done before, they are doing the write back of the provisions because some resolution of the assets also is happening. It's benefiting actually some of the PSUs also and these mid-cap private banks also. So in the Federal Bank also we had seen it, and its NIMs also have got steady because if NPAs actually have declined, it actually betters the NIMs position also. But my point is we cannot have a very high weight here because going forward, you may see a scenario of interest rate cut also. In our interest rate cuts, generally we have seen that some of the NBFCs, they start performing better because their cost of funds gets reduced. And that is where we need to possibly shift some money at a certain stage going forward from these banks possibly into some of the NBFCs also, if we have to keep in the BFSI space our allocation intact.
So Amit, tell us which ones do you like? Because even over there, I mean, some of the biggest names have their own regulatory issues to deal with. We all know what's happening with Bajaj Finance going slow, right? But then on the other hand, look at Cholamandalam today. Stunning growth, good numbers. So within NBFCs, how are you, going about your selection?
And if so as I said, valuations also we need to look at.
So, sorry, yeah, valuations. I'm just going to contextualize to add to Surabhi's point. I mean, there's this Suresh Ganpati and Macquarie put out this note. Interesting. He says that the valuation gap between Chola and Bajaj Finance is actually very, very low now. It's the lowest it's been in its history.
Wow.
But he says return on assets, the gap between Chola and Bajaj Finance is very, very large still. I mean, I think Bajaj is about 4.5%, north of 4.5%, and this is about 2.5, 2.6. Yeah, I mean, given that valuations have almost converged. So yeah, sorry to sort of jump in there, but go on, Amit.
Yeah, you are right. So we also we should not forget that Bajaj Finance still is under the pressure of the product ban that they had seen actually before. It is still not lifted. Some of the EMI cards and etc. So there are certain problems in certain segments because yes, regulations also are very tight, and it is right actually. I think we may come out winner only actually after all this. The transparency will come in, and I think if you look at from the NBFC space, I think some PSU NBFCs from which are catering to power, I think they are coming back. So they were not performing for the last I think 2-3 months, but it looks like the results are very, very good and they can come up very fast because their loan growth is coming around 17-19%. And we have seen there also that whatever provisions they had done, some of the provisions actually are written back. PFC is still 1.7 times price to book, and it looks very attractive to us. It is still one of the top holding of our portfolio, and they had expanded their book actually. So 25% is catering to the renewables. Its subsidiary REC has got this rooftop solarization in the last interim budget, and I think that is where you will see more loan growth coming in. So almost 24-25 lakh crore of funding requirement is there actually, which these companies have to cater to, and this is where the growth is going to come. So if your NIMs are coming up, your NPAs have declined, and because of this, the provisions, whatever you had done before, we have seen some write-backs coming in. I think it's a good situation. The only thing is, whenever valuations become better, you need to, increase more positions in these kind of stocks.
Okay, all right. Got that, Amit. Good talking to you. Interesting conversation as always. Thanks very much. We will look forward to the next one. On that note, we will take a quick break, come back on the other side. As usual, all the buzz from dealing rooms today and all the earnings chatter and news chatter that we have seen. And of course, then some final trades coming up with Mitesh as well.
Welcome back. For the second day running, actually, the Nifty Bank is underperforming now. Now it's down close to around 170 points. It's corrected close to around 400 points from the high point of the day. So that's a bit of a problem pocket. Explains why the Nifty now is up only 40 points from being up close to around 100 points earlier in the session. But a good time to find out what's going on in terms of dealing rooms. Nimesh is with us. Nimesh, what are you picking up?
Well, actually, the Nifty may be consolidating, but there are good moves in the broader markets today. The mid-cap index is a 0.5%, but a lot of individual stocks are buzzing in trade. Again, the sector that seems to be the PSUs. Big move in the PSU stocks. Again, PFC, REC are up. And for the second day running, I understand there are very strong buy flows. So the move in PFC, REC is backed by institutional buying as well. Both were part of my charter list as well on Tuesday. There is buying interest from larger FIs in both these stocks. So clearly the PSUs, it's well bid. Even for that matter, BHAL is well bid is what I understand from larger institutions. So again, PSUs is something which is driving this market up. You spoke about Nifty Bank under pressure, but again, that's purely driven by few private bank stocks like Kotak Bank and Axis Bank and all, right? So not much in terms of big movers there in the financial names today. But I guess the big thing to watch would be the global commodity prices, including crude. We are seeing a bit of a macro play in today's market. OMCs are up, Indigo was up, the paint stocks are doing good, auto stocks were going good. So if crude continues to be under pressure, you'll see a bit of a macro trade catching up in the Indian markets as well. So watch out for those kind of trades in the near term. But from a near-term technical perspective, I guess 22,400 is acting as a very strong support. So watch for that level. But I guess the momentum is clearly in the PSUs, and there is FI buying in the PSU names.
Nimesh, last 1 year or so many times crude has gone to $90, $92, $93, but that $100 per barrel remains elusive, which is good news from our perspective.
Absolutely.
So yet again, it's come off that mark. But what about individual stocks? What are you picking up?
Well, as I said, there were a lot of mid-cap and broader market stocks are buzzing in trades today. The first stock on my list today is Indus Tower. Post numbers are, in fact, for the last couple of days, the stock been consolidating in a very narrow range, but now I understand there could be a very large block deal in Indus Tower very soon. So that's something to try going forward. The second name is United Spirits. That's been buzzing for the last couple of days. And in fact, I understand there are very strong buy flows as well. A leading domestic mutual fund seems to be an active buyer in United Spirits of late. So that explains the move there. The third is both the Kotak Bank and Birla Soft. Both have been under pressure for the last couple of days. That's been the trend today as well. Kotak Bank is down another 2%. And for the third or the fourth day running, there are very large sell flows in Kotak Mahindra Bank. And so is the case with Birla Soft as well. Looks like some larger institutions are selling out on both these names at FI desk. And the last is a couple of large blocks expected in PNB Housing as well as in L&T Finance. The numbers are out for both these companies, so technically the cool-off has ended, and maybe now the city is anticipating large blocks in both these names as well.
Nimish, Indus Tower is interesting because, and looks like the blocks are back. Stocks start to show a little bit of performance, and there are sellers in the sites. You were mentioning AB Capital, I think, earlier this week. Now there is Indus Tower.
So Prashant, for all these names, the one of the key reasons is that now that the earnings season is over, especially the promoter entities or those who has a cool-off period or a block window, now they can come out and sell. So that is pretty much the theme which is going to dominate. As far as Indus Tower is concerned, if you look at there were multiple reports in the past as well. Looks like one of the strategic investors among the three investors, one of the last strategic investors is looking to sell half of its stake. So it's going to be a sizable block. I understand nearly $1 billion is what the sell-side analysts are working on in terms of building the book, and can happen very soon. That's the indication what I've picked up from my sources.
Maybe that explains why Indus Towers is not reacting to the good set of numbers, Nimesh, because Q4 numbers look good. There was a margin expansion. The tower ads are the best that we've seen in the last 3 years. And the management in the conference call also indicated that if the financial position improves, the company could start looking at getting back to giving dividends also. But despite good numbers, the stock has been subdued all through the day. Perhaps it's the fear of that supply. But thank you very much for joining in. Mitesh is now back with us for a few BTST calls. Mitesh.
See, I have Chola Finance as a BTST. It's given a very huge, big candle with good indicator setup. So take a stop at 1288, look for targets of 1320 here, and BPCL is the other one, which I would recommend a BTST with a stop at 630 for a target of roughly around 642.
Okay, all right. Thanks a lot for that, Mitesh. Well, Coal India's numbers will be out later this evening. So let's run it through the quick expectations. On the top line, there'll either be a flattish number or maybe mildly negative. The EBITDA number, though, on a year-on-year basis will look much higher, while the profit number as well should jump up to around 9,100 crores. The operational numbers we already have with us. So though the top line will be more or less flattish, the volumes numbers have come in impressive at around 7.5%. And they've started off this year as well with good growth in the month of April. So thumbs up on the volume front. The problem is in terms of realizations, and the blended realizations could be lower because e-auction prices have been lower as well. So that's a bit of an issue. But there'll be some cushion coming in from the FSA prices, because FSA prices will get that bit of a bump up from the price increase that was taken in May 2023. The e-auction volume growth, though, will be positive. So part of the pressure that we'll see on e-auction prices will be made up by higher e-auction volumes. Keep in mind that e-auction is the profitable part of their business. The margins will optically look very, very good because in the base year, there was that one-time provision, one-time hit of higher employee costs that got adjusted. What to track from here on? Management commentary in terms of growth. Will there be another price hike that will come about? That's going to be important as well. And any signs of an FSA price revision, because post the election, those hopes come back on the table. So we'll watch out for this set of numbers. The stock has been rock solid at around this 450 rupees odd.
All right, Nigel, thanks very much for that. Titan is the other one, but Titan only reports numbers tomorrow. Mangalam is here with quick expectations. Mangalam.
Well, for Titan, most of the numbers, the top line numbers are what the street knows of already because of their fourth quarter, update that has come by. In light of that, you have to track a couple of things. One would be the jewelry business margin. Secondly, qualitatively, the demand as gold prices are near record high. In fact, a 10% growth in the last 15-16 days itself of the fourth quarter is what we saw. And impact on studded jewelry because of lab-grown diamonds. So those are a bunch of factors that we'll be watching out for. What we know already is that jewelry business in India has grown by 19%, overall growth of 18%, and this is ex-bullion sales that they've done. Growth was similar across both gold and studded segments as well. So put all these numbers together, the street has penciled in about 16.5% growth in the top line. The standalone revenue should be around 11,300 crores with an EBITDA of around 1250 crores. That would imply a mild improvement in the margins of about 30 basis points, a little around 11%, and the net profit would grow by about 15-16%. The number you're looking at is closer to 850 crores. What we also are expecting is 12 to 13% margins in the jewelry business as guided for by the management. Watches margins seen between 9 to 10%, and eyewear business, which is in the growth stage, has seen a bit of concerns over the last few quarters, should see margins of around 5 to 7%. EPS growth, however, may be impacted by a higher interest cost due to the CaratLane acquisition and the company having raised short-term debt for that itself. The performance of segments is what we know already. Watches have grown around 7%, eye care division has declined by 1%, and Taneira has grown 37%, with CaratLane having grown 30%. So qualitative commentary and margins will be extremely crucial to track.
Okay, got that, Mangalam. Thanks very much. That's Titan also in focus ahead of numbers. The street is getting quiet. I mean, Nifty is barely 30-35 points higher. So it's turning out to be a bit of a quiet afternoon. Mid-caps, of course, doing much, much better. Let's take a break on that note. Come back on the other side. The final leg of today's trading action.
Welcome back. Well, the markets are trading very mildly in the green now. Nifty Bank is down. So let's get in Amrish Palika. Amrish, I believe today you want to talk about a banking name. So fill us in with the bank that you're talking about. It's a smaller size bank. And also, since you're talking about banks, give us your view on Kotak Mahindra Bank as well.
First, I'll give my pick, which is Bank of Maharashtra. This was established long back, 1935, a PSU bank with nearly 2,500 branches. I mean, it was more or less an ignored stock, but then in the last 3 to 4 years, we have seen a consistent improvement in performance. In Q4, they have posted the highest quarterly net profit, which is about 1,218 crores, 37% growth Y-on-Y, 19% growth Q-on-Q. It actually, like it was beating all expectations of analysts. In fact, they've recorded the all-time high ROA of about 1.74%, which is about In Q3 it was 1.32, so decently higher than that. Overall deposit book climbed by about close to 16% year on year. It's about 4,74,000 crores. 88 branches were added in Q4. And if you look at the asset quality, that has also improved sequentially. Gross NPAs have fallen by 16 bips to about 1.88%. I'm expecting an EPS of about 8.5 for FY26, giving a target of about 85. Now, when we talk of Kotak, yes, I think it started off with the regulatory issues, and now we have seen some top-level exits. I think this was expected to happen. If you have tracked Kotak very closely, because most of the senior leadership are those who have worked with a leader like Uday in the last 2 to 3 decades. And then when you have a new leader coming in, clearly there would be heartburns, there would be discomforts. So don't be surprised if you see some more exits, going ahead possibly in the next 1 or 2 quarters. But then I think as investors, we should remember that Kotak is an institution. And we as investors, I think, need to give more time for that adjustment to happen. We need to give at least another 2 or 3 quarters to the new CEO. I think that's when we should see performance. So I would, in fact, utilize any correction at this point of time to buy into Kotak from a longer-term perspective.
Okay, keep the faith on Kotak Mahindra Bank. Amrish, afternoon. What about Dabur? Have you looked at Dabur's numbers? We had them, Q4 was in line, but the management is now talking about how rural is doing well. Rural, growth was higher than urban growth by 400 basis points. And that same number was 200 basis points in Q3. And the company is guiding to a high single-digit volume growth plus some price realization improvement, overall driving a low double-digit kind of a top-line growth, with margins being steady around 20%. Thoughts on Dabur from here on? Because the stock in the last 1 year hasn't done anything.
No, this is what I've been saying for a while. Not just about Dabur, but FMCG overall, that any election season, run up to the election season, you will see a bump up in consumption, especially in the rural areas, because bottom of the pyramid is where the cash flows in. So, that's one. Number two, if the monsoons again are normal, this is what, is being told. So if monsoons are normal, you'll have the rural consumption going up. So overall, if you're talking of the next 1 year, I'm decently positive on the FMCG space, especially Dabur, HUL, as well as ITC.
Okay, so those are some of your picks on the FMCG side. Amrish, hi, good afternoon. We're talking consumption. Let me take the other side of it. I'm talking about autos because we've had now, all the data come through. Some of the two-wheeler numbers are still looking very good. Maruti a little disappointing. And then, there are the CV players. From the auto space, and by the way, M&M, of course, had that dream rally after the new launch, right, on Tuesday. From the auto space, would you allocate any fresh money anywhere?
In fact, in the auto space, I would concentrate more on the two-wheelers now, looking at the sort of sales which are coming out. Expected, at least the next 2 to 3 quarters, the sales should still show an uptick. So the best pick out here would be Hero MotoCorp, where I still see an upside of another 10% from here. TVS would be my second pick. And if you're talking of, SUVs and LCVs, then I'm actually talking of a stock like Mahindra. Because that's the other stock where I think there's a decent upside still left. Maruti, looking at the numbers, we could see some sort of a correction over at least the next quarter or so. But then if we see a decent correction of about 10 to 12%, Maruti should be a buy at those levels.
Do you track Atul Auto? Have you owned it or had coverage, Amrish?
No. In fact, I had missed that. And then after that, I have not really tracked it.
Okay. All right. Got it. I think we'll leave it there. Thank you very much for joining us, Amrish, and sort of good speaking with you as always. There's just about a minute and a half or so to go for market closing. So let's just start wrapping things up. We'll end off the highs by about 50-60 points. So the high was slightly above 22,700, but this is still a decent close, 50 points higher. Sometimes, just sometimes, it so happens that day 2 in the US market after the FOMC day turns out to be more decisive, more dramatic. So we'll see. But, hopefully it'll be the same direction, which is the fact that dollar went lower. Yields actually were lower as well. And I think that perhaps it's going to be more of that. That's what you need, and not like a reassessment. And that's also happened. That's also known to happen have happened in the past at least. But I don't think this is one of those meetings where there's any confusion about what they really have said or what they've meant. Mid-cap index also 0.5%. Actually, the Nifty and the mid-cap index are the two indices which did well. Bank Nifty was flattish to slightly lower, and the small caps didn't do very much at all today.
Well, let's run you through the big movers. On the way down, Kotak Mahindra Bank, the top Nifty loser, 3% gone. Other private sector financials like Axis, ICICI Bank, saw a cut of nearly 1%. On the gaining side, oil marketing companies, Asian Paints, beneficiaries of the decline in crude prices. So BPCL 4.5%. And you also had autos as a basket do well. The Nifty Auto Index up more than 1%.
You know, TVS Electric put on a 20% move today. And TVS Motors, of course, had very good numbers as well. So those are some of the names from the auto side that had a good session. Beyond that, Jana Small Finance Bank, another 12% up after a 20% rally on Tuesday. It's been really the shining star. Let's talk about what else. REC was flying high, 8 to 9% up on REC. In terms of result reactions, Chola Investment 9%, IndiaMart 8%, Newgen Software and NetWeb, two smaller IT companies, 5 to 6% on these. Dabur ending with a 4% sort of an up move. So good day for a lot of these stocks. HPCL, by the way, look at the gain on HPCL. It's 8% as we are closing out. IOC is up 2.5%. And of course, BPCL managed some green as well during the course of the day. Those are some of the major gainers. Speaking of stocks in news, let's just talk about how Federal Bank has ended with a gain of about 3%. And let's pull up some of the Godrej Group companies as well, with the division now clearly underway. 4% down on Godrej Properties. Aztec Life Sciences, where the open offer will come in, finally ends down. Started very well, but is ending down about 2% odd. So those are some of the major names that stood out. But otherwise, a day that really belonged more to the broader market. Nifty managing a 50-point up move. Bank Nifty ending with a cut of 0.3%.
All right, I think that's the wrap up as far as the markets today are concerned. So it's a wrap here on this show as well. Closing bell. Thanks very much for staying with us. From all of us here, goodbye. But stay with us because Markets Forward is coming right after and it'll take up all the action going forward.